I bought Didi Global at $12 per shares. Here are my reasons. Hello there, welcome back. So I'm looking at Didi Global right now. It is trading at $11.10 and it is much cheaper than what I bought the other day at $12. So questions here is that how low can this company go? I mean, how low the share price can the company go? Can it go to zero, or would that be a price that can go in? Now, my personal take is this. The worst situation for Didi Global is that it may go to zero. And I'm saying this is because Didi Global is now facing both policy risks and governmental risks with both US and China regulatory. And once the company has an issue with the regulatory, then the consequences can be very bad. I mean, one good example would be Ants Finance. I mean, you look at how the company is doing right now, and you can more or less guess, Didi Global, what kind of a situation that they may get into. Didi Global has just IPO last week on the 30th of June, and 3 days after its IPO, China announced that it's going to remove its apps from the app stores. The share price after the 4th of July holidays, when market opened, the share price was plunged. Now to begin, I'm not a fan of ride-hailing apps company. And the reason is very simple. Compared to Uber, Lyft, Grab, or any other ride-hailing companies, we know that these companies, these platforms are not making money. Uber took nearly 7 years for it to go IPO. Until today, they are still losing money, as the same goes to Lyft. And all these companies have been struggling for all this time. The novelty of these ride-hailing platforms has already long gone. So when Didi, wanting to go IPO in the US market, that's reasonable because the early investors want to cash out. To me, that to invest in this kind of company is really not that exciting, compared to other technologies to invest. It is now catching my attention is because the share price has actually plunged because of the Chinese government actions. Not only Didi, but Alibaba, Tencent, JD, and some of those China company that's been listed in the US market has been affected as well. There are several reasons why I invest in Didi Global after the price has plunged. Number one, the most important thing is that there was a lot of early investor was actually chasing the IPO on the first day itself. The share price actually went all the way as high as $18, and then subsequently it sort of like declined a little. Now, the reason why it has been supported by a lot of investors, my guess is because there's a lot of China, or rather Chinese supporters that is actually supporting this company because they are using the services on a daily basis. Don't forget that Didi actually has about 20 million riderships in China itself. And Didi is much bigger than Uber and Lyft combined together. So a lot of people are very familiar with Didi car ride-hailing services in China itself. I mean, I myself use that when, each time when I visit China. So Didi has and in my opinion, the price should come back to at least the IPO price, which is $14, because the fact that Didi is such a branding by itself. And I'm comparing it with Uber and Lyft. Uber is trading in the price range of between $45 to $50. Lyft is trading, above 50 to 60 range. And so Didi is much bigger than, the two platforms has combined together. And I feel that they are, Didi valuation should be at least on par with Uber or Lyft. Now, as I say, I don't even need to look at the financial statements because all three companies, they are just equally bad, right? I mean, Didi, their free cash flow, they sort of like been improved a little, but just got bad in the last year. And that similarly goes to Uber and Lyft. They are basically in the negative EPS. So all three platforms are equally bad. So financial does not mean anything at this point. Didi apps is being removed from the app stores by the Chinese government. And the reason given was that the platform, or rather Didi, has violated the personal data regulatory. Now let's don't, I'm not going to talk about the political side of things, but then again, we respect every company which operate in the business environment, they have to respect the local law, and that is something that Didi Global will have to comply, regardless whether is it going to be China, US, or the fact or any other part of the world. You just have to comply with the local regulatory. The point I'm going to say is this: Didi is a large corporation in China. Not only it creates millions of jobs for the people, it also provides the convenience for commuter to travel daily. It's unlikely that the government want to do something really hard on Didi. It's a matter whereby Didi management will be able to put all this data security in nice place, satisfy the requirement, the Chinese authority requirement. They should be able to back into business fairly quickly, in my opinion. So you may ask, is this a good price to get into Didi Global? Didi is still a functioning company, right? I mean, they are running a business with 20 million riderships daily. And the only thing that what has beaten down the share price at today is due to what we call a political risk. Didi did not comply to the China regulatory or even the US regulatory as well. But eventually this is going to sort out. I mean, this is not like a scam or anything like that. When all this is over, the share price is going to shoot up, quite quickly. As you know, the stock market is pretty much driven by sentiment. Alright, so that's all from me today. Now, if you like this video, please give me a like, subscribe to my channel, and I see you next time.